What do you think of when you think of money, of wealth? Is it an exchange you make for your time spent at your job? Is it hard to earn and easy to spend? Is it a birthright for some and a distant dream for everyone else? Is it the root cause of all evil? Are you always desperate to have more of it? Do you feel you've spent your life chasing it, always unable to reach it? The truth is, most of what you have come to know and understand about money has been influenced by the way you were raised and the environment you grew up in. If you watched your parents struggle to make ends meet, you're more likely to believe you, too, will not have much money as an adult. Or, on the other extreme, you will feel you have to work your life away to avoid living the lower class life your parents did. If I were a betting man, I'd say your school didn't teach you much, if anything at all, about money, which made your financial struggle that much worse. Your environment has led you down a path of false beliefs about money that only work against you, further distancing you from all the things you really want out of life. Stick with me. Hollywood has a rich history of depicting the wealthy as corrupt, evil, entitled, and greedy. The question is, do you buy into that? There are many high-level multi-million and multi-billion-dollar companies who were built from the ground up. We see them now in all their financial glory. But what exactly did ground level look like for them? Walt Disney, Disneyland. Ray Kroc, McDonald's. Doris Christopher, Pampered Chef. Each of these people didn't have endless supplies of cash on hand to fund their businesses, yet each one of them reached success in record time. How did they do that? And what do they know that you don't? They know a better way. Here's what you've been taught your whole life. Money comes from working a job. You are groomed from a young age to get an education for the sole purpose of filling a job within society. You work hard through first grade to get to second grade. Once you're in second grade, the next goal becomes third grade, then fourth grade, and so on until you graduate high school. You're at the top of the food chain. You think you've made it, but then comes college, and the cycle starts all over again. You work hard through college to get your degree that prepares you for a life after college. And once you've found a permanent job, now your goal is to climb the ladder through promotions and raises for the goal of funding your expenses and ultimately retirement. You may think, what's wrong with that? If you're here with me now, I'm going to assume your goal is to make money, a lot of it, in the least amount of time as possible. If that's true, and the notion that money comes from working a job is not how you'll get where you want to be, the single most precious resource is something we all have. It's the most important resource of all, and once it's gone, we never get it back. That resource is time. At your standard job, the amount you earn is directly related to the amount of time you put in at the job. So let's do the math. If you made $20 an hour and worked 40 hours per week, you would have to work 24 years before having earned $1 million. And this doesn't take into account taxes, living expenses, or even inflation for that 24-year period. Let the reality of this sink in. Most people who believe this equation, money equal time spent working, could never enjoy that $1 million earned until they are of old age and have spent 24 years living well below their means. But that's 24 years of your life you've let pass you by, and you'll never get it back. You traded your precious time for money all those years. and couldn't even live the way you wanted to. So how can there be so many wealthy people, many of them starting at a young age? What makes them so different from you? The truth is, they have a better way than you, a better formula for creating wealth, a different understanding of money that you haven't discovered yet. Pay very close attention now. Stop chasing money. If we play the game of life by the rules society sets for us, we will never reach wealth. In society, you are led to believe the harder you work and the more hours you spend working, the more money you'll make. But that's not what builds wealth. True wealth, like that of the Rockefellers, of Warren Buffett, and of so many others, doesn't come from trading hours for dollars. Do you think Warren Buffett attributes his net worth of $84.6 billion at the age of 90 years old to working from sun up until sundown? Absolutely not. So if he doesn't trade his precious time for more money, what does he do? What are the secrets of the wealthy? Well, what if you could get all the money back for every purchase you've ever made? What if you could create wealth through the debts and expenses you already have? What if you replicate what the wealthy are doing and apply it to your life right now and have it immediately start making a difference? If you're like most Americans, you spent your entire adult life paying the banks, your creditors, and expenses. At the same time, you've watched your retirement funds and legacy drastically fluctuate or even evaporate in the markets. You've been taught to give up control of your finances and assume risk, and it's costing you your financial freedom. The wealthiest people know differently. They don't chase money, and neither should you. The real transformation starts by looking at where all your money is going right now. The average person is giving up 90 cents of every dollar they make to someone else. So what if there was a way to take back the money that you give away to everyone else? Are you with me? I know this sounds impossible, but I promise you, it's not. And here's why. For over 200 years, the wealthy have used this strategy to eliminate debt, grow their wealth, minimize taxation, and leave a legacy. 200 years. The system has been around longer than our tax code, and it's available for you to use right now. But here's the problem. You have to change where your money goes first. This is what the wealthy have known all along. And every day, you allow your false beliefs to guide your financial decisions. In another day, you allow the secret of the wealthy to rob you of your future. By allowing your hard-earned dollars to sit in accounts and funds controlled by others, they are not working for you, but they should be. That's the big secret. Get in control of your money and put it to work for you. Wait, that's it? In one step, change one thing, and money will appear? That sounds too good to be true. How do I even do this? I can't take back the money I give away. If this works so well, why haven't I already heard about it? Stop. That's the old you talking. That's the you who used to believe working harder and longer hours would put you ahead of the game. That's the old you who bought into the lies that wealth means greed, evil, and corruption. But none of that is true. The real truth begins now, and it will set you free. If it's money you want, it's not money you should be looking for. It's control. Wealth is so much more than having money, taking vacations, and paying off debts. Even though each of those things are great goals, there's more to it than that. Being wealthy means living the way you choose to live. It means keeping your money in the family so that generations down the line, your family is still financially independent. It means being the captain of your own ship, instead of letting a 9 to 5 dictate the parameters of your days and nights. But to have what the wealthy have, you must do what the wealthy do. You have to mimic what the banks and the wealthy do with their money. And what do they do? I can tell you they don't keep the majority of their money in a bank. Instead, they become the bank. Banks don't care about you or your money. Banks make anywhere from 400 to 1300% more than you do on the money you can leave with them. Wall Street doesn't care about you or your money. It's of no consequence to them if you lose your retirement nest egg. They care about the fees and the expenses you pay them. What these people care about most isn't you, your money, or your future. They care about their money and their future. So why would you hand over control of your money to them? Are you listening? Do you honestly believe banks, Wall Street, advisors, 401ks, and other financial professionals care more about your money than you do? The answer is no. The real reason you give up control of your money is because that's what you've been taught to do. You've not been taught how to take back control of your money. You have not been taught how to make your money work for you. You're simply doing things with your money that you would never do with the things that money buys. Most people have been taught to put money in retirement accounts or employer-sponsored plans. You, your parents, your neighbors, your co-workers, you've all been taught to give up control of your money. But let me ask you a question. Would you ever buy a loaf of bread, put it in your freezer, wait 5, 10, or 15 years, take it out and then eat it? Would you ever eat that 15-year-old freezer-burnt loaf of bread? Would you ever buy your dream car, then wait 5, 10, 15 years to drive it? Would you ever buy your family's dream home, then live in an apartment for 5, 10, 15 years before moving into that home? No. So why do you do this with your money? Stay with me. What business do you know of that uses compound interest? The answer is there are none. Banks may pay compound interest, but that's not what they use to create their own wealth. All businesses, from banks to car dealerships to grocery stores to Wall Street, do one thing differently than you. They move money. They don't leave money sitting still, which is what compound interest does. If these businesses did use compound interest, they would go out of business. If the money stopped moving, the business would die. So why is it that you've been taught to leave your money sitting still? The wealthy know that to move their money, they need to find a more efficient place to store it. They have learned how to earn uninterrupted compound interest while still being in control of that money. And if they are in control of the money, then they can move the money, which makes them even more money. Is this making sense?
All right, everybody, you saw it right there. And first and foremost, from myself and also my partner in crime, Steven, thank you all for joining us for the Money School preview. This is preview number 1 of 4, and we have got an unbelievable training for you tonight. And I can't wait to teach you exactly what that video was just talking. Now, some of you came in, as the video was playing, but the fact of the matter is this: the number one problem people make when it comes to money is they give up control of it. We are taught our entire lives to give up control of our money to other people. Who are those other people? Wall Street, banks, and everybody else. 90 cents of every dollar the average American family or the average American worker makes goes to somebody else. Does that make sense? Is that you? Well, that has to change. And tonight, we're going to start to change that. because we have a big problem, and that problem is happening to every one of us.
There is a nationwide scramble to get more doses of the coronavirus
COVID-19 has battered the global economy, causing the worst recession since the Great Depression of the 1930s.
Today, I'm signing an executive order that directs the whole of government
On this training tonight, you're going to learn a lot of things. Most importantly, you're going to learn how to take back control of your money, but you're also going to learn how to do what the wealthy do with their money. You're going to learn the secrets of the wealthy and what they have been doing for years and years and years. And it's so simple because all you're going to do is mimic what the wealthy do. So Stephen, thank you for joining us. And what are we going to get into tonight?
Yeah, absolutely. So thanks for having me here. My name is Stephen Naugle, and I'll tell you a little bit more about myself here shortly, but thanks for being here. And like Chris said, I mean, this is all about taking back control of your money and solving the money problem. And let's face it, everybody has some kind of money problem in their life, whether it's learning how to protect that money, whether you're starting down here with just struggling to get by paycheck to paycheck, and you just know there's something more out there for you, know that you are meant to be more, maybe just never been taught it before or never given that opportunity. Or like I said, maybe you have money, you're approaching retirement age, and you just don't really exactly know how to make sure that you don't lose it all over the next coming years. I mean, I think everybody realizes the stock market's at all-time highs right now. The real estate market has gone literally to the moon, it seems like. We're breaking records all over the place. So it's just, how does all this fit into your life and what's coming up in the near future? And how do you not only protect, but also take advantage of what's coming up? So we're going to get into a little bit of history tonight. We're going to get in a little bit of action, because it's all about that action. You got to take action, because if you just sit back and watch it happen, guess what's going to happen? You're going to look back in 5 years from now and say, man, why didn't I do something? Why didn't I take action and take advantage of everything that happened? And I heard it so many times. I mean, I got started in this industry 2005, 2006. So right before the last financial collapse that we had. And I can't tell you how many people I met in 2010, 2011, 2012, even today in 2021 that say, man, I wish I would have bought more real estate in 2008 when everything collapsed. Or I wish I would have bought the stock market the last time it collapsed. Or I wish I would have bought Bitcoin 10 years ago when it was pennies. And now it's, $40,000, $50,000. So there's so many of those. I wish I would have, I wish I could have. Well, every single one of you can. And we're here tonight to teach you exactly how to take advantage of what's coming up and how to make that happen for yourselves.
The thing I always like to bring up is, a lot of people, when they're looking at a money problem or their money situation, like they think I did something wrong. You all did nothing wrong. Everybody on here tonight, you are the 5%ers. You see, what you have to understand is if we took 100 20-year-olds and we asked them all whether they're going to be successful by the age of 65, what would the answer be, everybody? The answer would be yes. Every one of those 20-year-olds, the 120-year-olds that you asked that question to would say, absolutely, I'm going to be successful by 65. So then if we fast forward to the age of 65, something drastically wrong happened. And that is exactly what we're going to talk about tonight. We're going to talk about why the Social Security Administration says that out of 100 people, only 5 of them will be financially secure at the age of retirement. And the good news is, before all of you get worried about that, that's not going to be you, because you're the 5%. The other 95% that aren't going to be financially secure, they're not here. They're mowing their lawn. They're doing something else. They're not investing their time to be here to learn how not to be the 95%, how to be the 5% that are going to be financially successful, but not just at retirement, because that's way too long for some of us. We're going to talk about how you can build your wealth every step of the way by being in control of your money, and how to do it while living the life you want. I ask all of you a question, and this is an important question, and you need to look at yourself in the mirror and ask this. What are you working for? Why do you go to work? Why do you do what you do? Why do you hustle so much? What are you after? And if that is a question you can't answer, that's where we need to start. Because all of you need a destination. You need to know exactly where you're going so that we can plan that out to figure out how to get there. And you know what I always tell people? This is what a mentor of mine once told me when I got asked that same question. I failed at that question. I didn't know why I was doing what I was doing. And you know what I'm working for and what I think all of you are working for? It's called the perfect day. What if you could wake up every morning and you could live your perfect day? Whatever that perfect day looks like for you. But if you don't know what that perfect day is, how can you ever live it? If you don't know what it looks like, what it smells like, what it feels like to live your perfect day from the second you wake up to the second you go to sleep, how can you get there? We need a destination, and that's on you. Because what we can show you is how to get to the destination, but you have to know what and why you're doing what you're doing. That's exactly what you got to figure out. We'll get you the rest of the way. Stephen, what do we got in store for everybody tonight? Because I want to get right into this and waste no time.
Right. Yeah, absolutely. So, what we want to do is introduce you, and I have some slides here that we're going to pull up. We want to introduce you to the money school, system for creating and building wealth. And, we talk about 3 different pillars of education, which I'll get into. But before we do that, I just want everyone to realize, going back, we really, we're going to cover a lot of different topics. All right. So we go through everything from real estate to the stock market to everything in between when it comes to building wealth. And there's a reason for that because everybody's a little bit different. Okay. But I want you to realize that no matter where you are right now, or whether you have zero experience with finances, or whether you've ran successful companies, it doesn't matter because what we teach applies to everybody. And all you need to do is change one thing. By changing one thing, it's going to change everything for you. It's a snowball effect. And I've been doing this now for over 10 years, for almost 14 years. Chris, we've been teaching this class now for a couple of years specifically. And that's what I've learned from working with all of our students and clients over that time, is that anybody can do this. And by just making that first step, just having that confidence to move forward and make one little change, it changes everything. And so that's what we're going to do tonight, is show you how to make that one change, show you one specific technique you can implement right now, starting today, that'll snowball for you down the road into the future. Okay. So that's what we're going to cover here tonight. So I wanted, before I pull up the slides, Chris, I just wanted to read one email that we got last week from a student of ours. And this was from a student, his name is Gene. And he just said, He said, I just wanted to thank you both for setting up the private money school. I was able to close on 2 lending deals this week. He said, thank you for giving me the means to put my lazy money to work, which we're going to talk about tonight, lazy money. He said, the deals are great, but the education you provide is priceless and empowering. He said, I'm sure you guys hear this all the time from your students, but I will say it anyway. Keep up the great work and keep educating us. I own 3 companies with over 300 employees, but you guys have taught me more in the last 6 months than I've learned running my companies for the last 20 years. With gratitude and appreciation. But listen to that last part. I own 3 companies with 300 employees, but you guys have taught me more in the last 6 months than I've learned running my companies for 20 years. So like I said, it doesn't matter what your experience. If you ran companies, financial education is just something that's not taught in this country. Financial education is not taught in high school. It's not taught in college. People like Robert Kiyosaki and Rich Dad Poor Dad, who was one of my mentors when I first started in this business 12, 13 years ago, that I ended up working side by side and speaking on stages with Robert Kiyosaki. People like that go out and teach this stuff. People like R. Nelson Nash, becoming your own banker, how to become your own bank. Like these strategies and these techniques, like Chris said, this isn't stuff that is only for the wealthy, but all the wealthy use these same strategies, and every single one of you should and can as well. It doesn't matter where you're starting today, because you need to take that first step. So that's what we're going to get into tonight. So let me know, Chris, so we can get this rolling.
Yeah. How many of you are here for the first time? Like, how many of you have never been to a money school or money multiplier event? In the chat, we're going to be watching the chat the entire time. And also too, as we go along, listen, we can talk at you, but we want to involve you in everything we're doing. So please type in your questions in the Q&A down below, and we'll get to all your questions, because it's one thing for us to teach you this, but it's all about you. If we don't know your destination, if we don't know what your money problem is, and listen, some of you are like, I don't have a money problem. Everybody has a money problem. And you know what everybody's money problem is? We all want to make more. That's what everybody's money problem is, to keep it to the simplest level, and we can go down from that. And we need to tackle that tonight. And you know, a lot of you are getting around the campfire, that's what we call it, for the first time. And this is going to be great. But some of you have been around this campfire for a while. I'm looking at the names. Some of you have been here. And it's amazing, because the one thing I will tell you with our clients and our students is once they get around the campfire, they keep getting around it. And it gets better and better, because what we teach, the truth about money, is not something that you can learn one time being here. It's not something we can teach you in an hour and a half. We've got to get you around the campfire, which is why we're doing this 4 times. But we're going to get into whatever you want to know tonight, ask, and we're going to hit it. But we're going to cover everything from real estate to how to build wealth out without working harder, without working longer, without taking on additional risk. How many of you like taking additional risk to build your wealth? If you do, this is going to be difficult, because we don't like taking additional risks. We like building wealth the guaranteed way. We like building wealth the safe way. There is too much risk in the markets right now. I will tell you, and we're going to talk about that. Anybody that's plowing money in the market right now will very quickly, I don't know when, but very quickly realize that was a massive mistake, because what's coming, the storm that's coming in the future, and when I say the future, it's because I can't time when this is going to happen. Could be this year, could be next year, but it probably won't be much longer than that. The storm that's going to hit us all is going to be one that if you're not ready, it's not going to be good. And you got to decide. All of you need to decide something right here and now. Draw a line in the sand, and you need to decide what side you're going to be on. Are you going to conform and just lay down, bury your head in the sand and wait for this storm to blow by? Or are you going to actually rise up and create the financial destiny that you want? Because if you're on the other side, the creation side, guess what? That's what the 5%ers are. The 5%ers are the creators. The 95%ers are the ones that conform. And I already know the answer. Every one of you are here to create. And that's what we're going to do. We're going to give you the tools, the guidance, and everything you need to create the financial destiny you want. So Stephen, let's dive right in.
Yeah, absolutely. I'm just going to pull up slideshow here. Right. I should be able to hit play. Let me know. All right. Do you see the right screen?
Switch the screen.
Wish I knew how to do that. Here we go. Maybe this one. How's that look?
That's perfect.
Okay. I think we hit already some of this stuff. So I can't see the chat box, Chris. So keep an eye on that for me while we're going here.
I got it. And I love it. You know, we got Jack, who owned a UPS store. We got a bunch of business owners on here, a bunch of real estate people on here. So that's phenomenal. Let's keep it rolling.
Yeah. So, I mean, I know a lot of people know your story, Chris. You know, like I mentioned before, I got started as a personal financial advisor myself with Ameriprise Financial out of college, and quickly realized that, you know, there's a lot of challenges with the traditional means of investing and advising people when they're approaching retirement age, and, you know, everything that goes into that we're going to talk about tonight. So I'm not going to get too much into it, but I did that for a couple of years. And then that's when I was introduced to entrepreneurship and real estate investing. And I started meeting people like I mentioned before, Robert Kiyosaki, and started traveling the country and learning and implementing what I was learning at the same time that I was going out there and teaching it, and built a couple businesses and did a lot in real estate over the years. I've then had the opportunity to travel all across the country, speak on thousands of stages at this point with thousands of students, work with them one-on-one, been to 47 states and several countries now. And I currently live down in South Florida, in the Jupiter, Florida area, with my wife and my son, who's now 5 years old. My picture's probably about a year old now, but down here. So it's been a wonderful thing. And, you know, I grew up in a small little country town in the middle of Southwest Virginia. So if you hear my accent come out every now and then, that's why. But I love South Florida and living by the water here. We boat all the time, and it's a beautiful thing. So, you know, we talked a little bit about, you know, what money school is and why we're here just now. So I'm not going to get into it because I want to get into the actual training. But before I do, at the bottom right here, it's never about your actual resources. It's about how resourceful you can be. And when I first met Chris, that was one of the first slides that I saw. And I think I took this slide from you years ago, Chris, and you kind of look like a baby in this picture. I think somebody
That's a little old.
I think somebody told me that I need to update that, but I keep it here on purpose though, because it reminds me when I first met you, and that's the first thing, because I've always believed that, I mean, I came from, and I'm not going to get into it, but your actual resources don't matter. It's all about how resourceful you can be. If you're willing to go out there, one of my favorite sayings is work smarter, not harder. And I feel like everything we do creates that to be possible, between taking advantage of uninterrupted compounding interest, between taking advantage of teaching you how to take lazy money that you never even knew was possible and get it out there, creating additional income streams and creating multiple streams of income for you. I mean, this is how you create true wealth. And so I always will keep this slide right here for you, Chris. But
I love it.
So let's get into the 3 pillars of education. What do you think?
I think that's great. And, the other thing, right back to that, it's not about your resources. It took me a long time to understand that. I failed so many times. I'm not going to tell my story, but I failed in the early 2000s, had to go, I was self-employed, had skateboard, snowboard shops, was living the life as a pro snowboarder. And then the dot-com crash hit in the 2000s. I ended up having to get a job. I landed in Wall Street as an advisor. I became a top financial advisor, making tons of money. And then I, again, in 2008, dove in, bought a strip mall, a dilapidated paint store that I was going to convert to a strip mall. And the recession hit, the Great Recession, and it crushed me. I literally had to ask my new girlfriend, who had just moved into my house, I had to ask her to pay the mortgage and to pay the utilities and let my friends move into bedrooms in the house where we lived. I wasn't comfortable with this. That's the sacrifice that I had to make to basically make it through that time. And then I got back on my feet. And then in 14, after building up a rental portfolio of 36 units as a young man, I had to sell all of those units because I made mistakes. You see, folks, even though I was a high-level financial advisor, and at that point up to 14 years as an advisor, making tons of money, the knowledge that I was taught, the knowledge I gave to my clients as an advisor wasn't all the truth, because I was riding a roller coaster, and the information I didn't have, that's what held me back. And after that crash, after I lost it all again in 14, that's when I got serious about learning what you're about to learn, which are the 3 pillars of education. And I had to learn it the hard way. And what we're going to teach you is the straightest path possible, so that you don't have to ride the roller coaster that I did. So you don't have to ride the roller coaster of other people that have failed over and over again. We can absolutely change that for you, and we will. And it's as simple as changing one thing. And it doesn't matter how much money you have. I don't care, if you're struggling to get by or if you've got millions of dollars. This training is for you, because this training involves just changing one thing. I can't help change your mindset. Your mindset's going to have to be changed by you. But I will tell you this. It's a quote by Will Rogers. Will Rogers said, "The biggest problem in America was not what people don't know." Will Rogers said the biggest problem in America was what people think they know that just ain't so. And that is profound, because that is the truth. It's not what we don't know. It's what we think we know that holds us back. So I challenge every one of you watching this, if you're here for the first time or the 50th time, I challenge you to keep an open mind on what we're going to teach you, because it is 180% or 180 degrees different than what you've been taught about money, because we're going to teach you the truth about money, the things that the people don't want to teach you because there's no money in it. And that's where the freedom lies. So let's get into the 3 pillars of education.
Absolutely. So these 3 pillars, like Chris said, these are built on experience and mimicking what the wealthy do. So first off, the first pillar, and this is the foundation for what we do, is real estate. Now, how many of you, when I say real estate, automatically think, oh no, not another real estate training or another real estate show, right? And don't worry, that's not what this is whatsoever. I've been there, I've done that. How many houses did you flip, Chris? 260?
Yeah, we're just under 260 houses, and
just under 260 flips.
I
I
would say
haven't
too
done
many.
that many, but I've been involved in many, many, many flips over the years. Chris had his own show on HGTV called Risky Builders, where they're following him around showing that. So we've been down that road before. Real estate is excellent, but there's so many smarter ways to use real estate when building wealth. There's so many other ways than what you see on TV with out there house flipping and things like that. I mean, if you're starting with nothing right now, one of the quickest ways you can go out there and really start creating wealth or start creating a new path for yourself is through using real estate through something called wholesaling, where you never even close on the property. You just put it under contract, you sell it to another investor before you move on. If you want long-term mailbox money coming in, maybe we look at rental properties. So these are all the common things you've heard of, long-term holds, rental properties. Or if you want to make the quick cash right now, the flips, right? Go out there, buy it, rehab it, and sell it, buy low, rehab it, sell high, and make that profit through flipping. So yes, that is all areas of real estate. And maybe that is something that you're interested in, but there's so many other aspects of real estate investing. And that's what we're going to get in with you with Money School. We're going to teach you the real foundation behind real estate and how real estate can truly help you and your family create wealth for the future through many, many different ways. And a couple of those, just to give you an example, ways that you can invest in real estate and you never have to leave your own home. You do absolutely zero work. You simply give somebody else your money and let them go do the work for you. But your money is protected still by that piece of real estate. So your money's 100% secure and safe the entire time. And who would like to make 12, 13, 15% returns plus points for doing that right there?
Let me comment on that, Stephen. It's really important. And, David, who's one of our guest tonight, is mentioning that, real estate, he had zero interest in it. And that's important because every one of you are different. Some of you love real estate. Some of you are like, I don't ever want to deal with real estate. Maybe you had a bad experience in real estate. Well, here's the biggest thing I'll tell you. It doesn't matter where you fall on the spectrum. I love real estate or I hate real estate. When I was in real estate doing lots of flips, it was some of the hardest work I'd ever done. And it sucked. Almost every day was awful, except for the day when I got a check. But that was short-lived because the next day there was more problems. And a mentor of mine once back in 2015 told me, he said, the ultimate in real estate is being the bank. And all I thought is, okay, be the bank. That means I got to have millions of dollars. So I'm going to flip my way to being the bank and do that. That path was not the correct path. You see, just like Stephen mentioned, it's not about your actual resources. It's about how resourceful you can be. Being the bank doesn't mean you have to have all the wealth. It means you need to understand how money works. And that's a very important thing. And I'm glad David mentioned that, because a lot of people, when we mention real estate, instantly they've seen real estate trainings. They've been to enough of them. They're like, I don't want to learn about real estate again. Good, because we're here to teach you about money and how to make that money work for you, whether it's in real estate, whether it's in lending, no matter what it's in. It doesn't have to be in anything. We're just going to show you how to take that lazy money and put it to work.
Absolutely. And spot on. I mean, that's the second pillar of education. The second foundation that you need, is the money aspect. So understanding money and how it all works together. And, going back to real estate for just a moment, even if you don't like real estate or you've been burned in the past or something's happened, or you just say, I don't want to go through learning how to flip or own, deal with tenants, toilets, and termites. We hear that all the time. There's so many other strategies, but the reason why it's one of the pillars of education, even if you can't stand it, is if you want true wealth and you want to truly create generational legacies, you're going to have real estate in your portfolio. It's just, again, it doesn't have to be active. It can be passive real estate. It could be multifamily apartment complexes. It could be affordable housing like mobile home parks. It could be land. I mean, land, look what land is doing right now. It's unbelievable, flipping land. And this is all stuff we teach you through Money School. But the real estate, you talk to any millionaire, any billionaire in this world, and guess what? They own a large part of their wealth is real estate. Guaranteed, every single one of them. So real estate has to be at least understood, and it has a lot of advantages, not only for appreciation when the equity goes up and markets go up, but also there's a lot of tax advantages to owning real estate. There's a lot of depreciation. So it's going to end up in the long run creating more money for us and our families, because we're able to save a lot more money and keep a lot more of our hard-earned money through different tax deductions and things like that. So there's just so many different aspects and areas of real estate. And again, just to be clear, what we teach, we're not going to teach you how to go out there and market and put homes under contract for pennies on the dollar. We could teach you that, but that's not what money school is. Let some other person do that. We're not going to teach you how to go out there and put a contracting crew together to go in and do all the painting and fix the roof and rehab a house and all that stuff. We're not going to teach you that kind of thing. Okay. That's not what money school is, but we're going to teach you what real estate is and what it does for you and your wealth. Does that make sense? All right, perfect. So yeah, so like I said, so the second pillar of education is money. And so we're going to teach you how money works, how money moves, how money flows. And that's something that you need to start learning right now today. If you take nothing else out of tonight's training, just understand this. The key to success is to have your money always at all times out there working for you just as hard as you work to get that money in the first place.
But that's not what people are taught, Stephen. People are taught to take their money and put it somewhere and leave it sit, whether that be in a bank account, a CD, a 401k, an investment account. Park it and leave it for someone else to be in control. But that's what we're taught. And it's none of these folks, fault for that. That's just what we're taught from a young age straight through life. And the reason for that is somebody else wants to be in control of your money so they can make money on that money. And all we need to do, literally, it's this simple. All we need to do is change how we handle that and then take back control and mimic what they do with our money. So, when you put money in the bank, you're putting it there because you're saving for something. Maybe it's a rainy day fund. Maybe it's an emergency fund. Maybe it's for a house down payment, a new car, whatever it is. You put your money in the bank and you leave it sit there. And while that money sits there, does the bank just leave it in a little box with your name on it? Absolutely not. The bank moves your money. The bank takes that money, and in those little glass cubicles behind you, they move that money and they move it and make 400 to 1,300% more. And we don't even think anything of it. We're okay with the 0.006 or whatever it is these days. We're okay with that because we just think that's how it works. But that isn't how it works. And the wealthy know different. The wealthy know how to move their money, and all of you need to learn how to do this. And I know a lot of people think, oh, that sounds, complicated. It's not complicated. Look at where your money goes today. Let me break down money to you in a very simple way. I'm holding $100 right now. And whether you can see it or not, it's a $100 bill. Okay. When you make this $100, what do you do with it? Some of it might go into your 401k, where that money actually that goes into your 401k gets invested into a basket of limited mutual funds that typically are high fee, just so you know, but it goes in there and then what? It sits there. It sits there where you can't touch it, and it grows or doesn't grow depending on market conditions, so that someday later we take that money back. But let's think of some of the main things about money. What is money? What is this $100? Okay. In its truest form, what is the definition of money? It's a means of exchange. That's all it is, and it's all it ever has been. I don't care if it's gold, coins, crypto, or anything. Money is a means of exchange. Then, is your money worth more today, or is it worth more in the future? It's worth the most today, especially right now, almost more than any other time in history. Your money every day loses value, because when the government prints money, those printed dollars, those fiat, like money that just falls out of thin air, that money has to get value from somewhere. And you know what it gets value from? Your money. They steal it. It's a hidden tax called inflation. So your dollars become weaker every single day that you have them. So the last thing I would ask you, taxes. And we're going to hit the biggest eroders of wealth, but taxes are one of them. Are they going up or down? Of course they're going up. We already know that. So if your money's worth the most today, okay, if we know that money is a means of exchange and that's how we take advantage of opportunities, and we know taxes are going up, then why in the world would we give up control of our best dollars today to put them into something that we're not going to be able to use for 5, 10, or 15 years? Folks, I'm just trying to get you to think about what's really going on there. You see, we do things with money we would never, ever do with things that money buys. Would you ever buy a loaf of bread, put it in the freezer, and wait 5, 10, or 15 years to eat that loaf of bread? When you took that out of the freezer, you wouldn't eat it. You'd throw it in the garbage because it's freezer burn. Would you buy a brand new car, your dream car, and then as soon as you get the keys, would you wait 5, 10, or 15 years to drive that car? Of course not. Would you and your significant other buy your dream house, and the second you close and get the keys to move in, be like, oh, honey, hold on. We can't move in. We got to wait 5, 10, or 15 years. Of course you wouldn't do that either. You'd be divorced if you did that. But that's exactly what you've been taught to do with your money. You've been taught to do things with money that you would never, ever do with things that money buys. And that's exactly what we're talking about with money. It's so simple to change it. But first, it starts with a mindset shift. You got to change how you think about money. Secondarily, then you got to change how you handle money, and you got to know how to move it. And that's some of the stuff we're going to talk about when it comes to money.
Absolutely. And we're not talking about making drastic changes to anything that you're already doing, just making one change where the money might go first and how you tap into money that you didn't even know existed in your life, that's sitting there right in front of your face, that you can put to work for you to create more money. And when you start understanding money, and we're going to show you that here in a minute, this will all start to make sense. So that's why we focus so much on money. And again, I mean, real estate and money, traditional ways of thinking, I want you to completely just put it all out of your heads, because what we're going to teach you is completely different than anything you've ever heard before when it comes to those two topics. Okay. And then the third pillar of education is legacy. All right. So once we create the foundation, once you understand how to get that money moving, then we need to move on to how do we protect that money? How do we keep more of that money? And how do we pass that money on generation to generation and create that legacy for you? And that's where we really excel and specialize. Chris was a high-level financial advisor for 16 years. I was one for 2 years, but I've traveled the country for 12 years, making connections and networking and building relationships. And we've brought together experts that will teach you how to create this legacy in a way that will blow your mind.
Yeah, and I want all of you to think about legacy, because a lot of people think a legacy is, the money we leave to the next generation, which it is. That's a legacy. Think of the Rockefellers and the Rothschilds. When one of them pass, or from here on out, when I'm thinking of or talking about die, okay, I hate that word. I'm going to call it graduation, big graduation. When one of them graduate, the money that they've earned in their lifetime and the legacy play that they did goes back to the trust to fund the next generation. How many of you, and if you could all chat this in, how many of you have children? Okay, I don't care what age they are. How many of you have children? I want you to think about that. Now, I don't want you to think about a legacy as being something that happens the day you graduate. I want you to think about the legacy that you create while you're here. I have a 1-year-old. She just turned 1 last Tuesday. And there's not a day that I don't think about the knowledge that I'm going to give Viviana, my daughter. And that knowledge is going to be the things I'm going to teach her that will change her financial future, her destination. It will change how she lives, how she can serve others, and what she can do in the life, which is more than what I was able to do through the knowledge that I was able to pass on. That legacy is the most valuable legacy you can do. Teaching your children how to be a good steward of their money, how to be in control of their money. But most importantly, teaching your children how to give and give more. Because one of the universal laws, whether it's real estate, money, or legacy, the one thing that ties them all together, and the number one thing that will make every one of you have a better life, is giving more. But you know what? If you don't have control of your money and you don't have the wealth, how can you give? Easy. I know you are all thinking, oh, well, you can't if you don't have money. Giving isn't about money. Give the gift of helping somebody smile or laugh. Give the gift of helping somebody cross the road when they can, or get their groceries. Giving is far more than giving money. So when we talk about legacy, yes, we're talking about, the big legacy, which is what we leave when we leave this earth. But think about the legacy you have to give while you're here. And one of the biggest things, I'm so grateful that Stephen and I are able to teach about money, because money is the tool that we all use to live better lives, to help other people live better lives, and to give more. It's just a tool. It's like the shovel in your garage. That shovel is a tool that can be used for good or evil. But we only focus on the good, and I want all of you to focus on that. And that's what I think of legacy as being.
Yeah. So here's one from Michael. This experience has been amazing. I would highly recommend anyone who is serious about learning the specifics and function of wealth and money to attend. I'm so grateful that I attended. I'm so much more prepared to take action and feel confident. Thank you. Thank you. Thank you. I mean, we have so many of these I could go through, so I'm going to skip through them, but excellent material. My age, no one has ever easy to understand and learn how to utilize money we have in other people's money. The structure of the class and how everything flowed was great. Ruby, yeah, those are awesome. So here's what I want to get into, Chris. Let's talk a little bit about history, if we can.
Yeah, sure.
Do you want to do some drawing, maybe?
Oh, I do. Anytime I get a pen and a pencil, man, I'm ready to rock. So you just tell me when to go and I'll go.
All right. So I'm going to stop the share, actually.
That soon, huh? All right. Throw the chair aside. Get the pencil. All right. What do we want to talk about?
All right. Yeah. So markets and opportunities. So you have to understand, like, everything that we're talking about here is going to prepare us for what's coming. Okay. Time is of the essence with this training. So what we teach, it might not be pertinent next year because everything could change by then. Who knows, right? It's not about the timing specifically of the markets. It's understanding that it will happen and preparing for that to happen. So we're going to talk a little bit about how to get ready and protect what you currently do have while we're at these all-time highs. And then we're going to talk about how you're going to be able to really get in and take advantage when the markets come down here to create true wealth. Because let me tell you, when blood's on the street, that's when billionaires and millionaires are created, period. And we're not, and one thing I want to clarify, Chris, before we go in, we're not ever going to take advantage of people. All right. We don't do that in money school. If we ever hear of somebody that's working unethically or unmorally or not doing things the right way or screws over somebody else, they're immediately banned, out, gone, doesn't matter. They're gone. And we blast them. We tell everybody who they are too, so nobody else will do business with them. That's not how we do business. We do things ethically, legally, morally, and proper every single time. And that's how you stay in this business for many, many, many years. And that's how you create true success. So when we talk about taking advantage of situations, there's situations in the economy, not people. What we do as investors, what we do as business owners, what we do in real estate is we help other people. And those are the strategies that we teach. If you can find a solution to help somebody else, your own success will go through the roof every single time. I don't care what business it is, what investment it is. It's all about helping other people, and you will be successful doing that. So just wanted to get that off my chest.
Yeah. And with the markets, I could do a whole hour and a half just on the markets and what's coming. We're not going to do that because some of you wouldn't get value out of that. Others would. But here's the thing I want to make sure you all understand is I want you to understand that, if we were to look at the markets, we don't ever remember what happened in the past. We might remember the Great Recession. We might remember the Great Depression, but very few of you remember right here, the Chinese stock market crash, the crude oil plunge in 2015 and 16. Some of you are probably like, I didn't know that happened. Okay, how about the UK, the EU referendum, Brexit? Maybe some of you remember that. Most people won't remember all of these things. How about the European debt, the sovereign debt crisis, like 2011? I was a high-level advisor managing tens of millions of dollars for people. I remember that because that day sucked. That whole period of time sucked. But most people are like, I don't remember that because nobody's really paying attention because they've all been taught that just invest for the long haul, let it sit, ride it out. But how come, if that's what everybody teaches you, put your money in the market and just leave it go? Why is it that the wealthy don't do that? Why is it that Warren Buffett right now, publicly, you can look this up yourself, it's all over YouTube and the news. Why is it Warren Buffett is selling a lot of stocks right now? Why is it that Bill Gates, another multi-billionaire, is selling a whole bunch of stocks right now? Why is it that Ray Dalio, the founder of the largest hedge fund in the world, the one who manages China's money, why is it that he's all over the news talking about what's coming, the storm that we're about to talk about? But yet everybody else is just telling you, oh, put your money in. Remember I mentioned create versus conform? All those people I just mentioned, Bill Gates, okay, Warren Buffett, Ray Dalio, I could keep going. They create. And they also take advantage of opportunities. But you're also sometimes led off of the cliff because if you just follow what everybody's doing, if you do what everybody's telling you to do and you conform, everybody's putting money in the market. Oh my God, I'm missing out. The fear, the FOMO, right? I'm missing out, fear of missing out. That euphoria that we all feel when, we're not in Bitcoin and Bitcoin's going up. Oh my God, I'm missing out. But the second you get in, doesn't it always go down like the next day? It's Murphy's Law. Okay. We're put our money in a stock that everybody's piling into. And then all of a sudden, what's it do? It goes down. Always. But, it's okay. I got to hold out for the long haul. Well, let's talk about the holdout. Let's talk about the myths of what we've been taught about money. Here, let me get a new screen on here. So I'm gonna start fresh here. Here's what we've been taught. We've been taught to take our money and invest for the long haul. Just put your money in and invest for the long haul. And what happens when we do that? You know, the market, does it work in a straight line? Is this how the market goes up, just straight up every single time? Heck no. The market does things like this. It goes up and then it goes down, and then it goes up and then it goes down, and it goes up, and you guys get the drift, right? Up, down, up, down. Well, here's kind of how the market's looked recently. Here's down. Now we're at all-time new highs. This is just, I want everybody, this is very easy to teach. This is 2008. A lot of people don't remember this, but when the market went down, I was an advisor. And when we got down around that 50% mark, you know, we had 20, 30, 40% drops. Like, these were all bad. I'm going to do these with red. Okay. These were awful. But the reason this never works, the buy and invest for the long haul, is not because it doesn't work, because it does. If you just put your money in and you leave it and you can wait, you know, ride it out for 20 years, let's just say this is 20 years, you'll probably be okay. You more than likely statistically will have made money, but how many of you have actually been able to ride out every market cycle? Because here's what happens. 2008, when it dropped 20%, uh-oh, honey, it's getting bad. It's, you know, people at work are losing their jobs. This bank just went bankrupt. Like, it's getting bad. Then it hit 30%. Oh my goodness. Wow. This is when reality sets in. Okay. This is, and then 40%. That's where fear sets in. Fear is one of the most powerful things in the market. When fear kicks in and the media starts saying everything's failing, it's going down, it's never going to end, the whole financial collapse. You guys all remember this. It was just 2008. And then 50%, this is where action has to be taken. And when action has to be taken, why? Somebody loses their job. Okay. Somebody can't afford their mortgage. They can't afford to put food on the table. They can't afford college tuition payments. What are they going to do? They're going to leave their money in their 401k, or are they going to take that money out so that they can provide for their family? So what do? They sell. Did they sell at 30? Did they sell at 40? Did they sell at 50? Do you realize if you get out at 50% down, you have to make 100% just to get back where you were when you lost 50. If you lose 40, you have to make 63%. If you lose 30, you got to make 43%. This is called the drawdown factor. You don't understand it because nobody teaches it because they don't want to scare you. Well, you need to wake up and you need to understand this because this is real. When reality kicks in, when fear kicks in, when action has to be taken, this is why most people, not all, some of you maybe did, but this is why most people can't ride out the storm. They just can't. Okay. The reality, the fear, those things kick in. So let's go to where we're at today. You all remember last year, this just happened. Newsflash, last March, the market crashed. In February, it started and me and Steven remember this well. We were in Disney putting on a money school event right when the government, or right when the president shut the country down. We were literally in a ballroom with no one there that we had a bunch of money invested in, and the government shut the whole country down. We had to change everything. We had to pivot. That was last year. That was March. And what happened in March? Did the market not fall? It was about 35% the market free fell. How long did it take for it to fall 35%? Does anyone remember last year? How long did it take? 2 weeks? 3 weeks? You know, in 2 weeks, in a week, you lost 10, 15%. In 2 weeks, you probably lost 20, 25%. In 3 weeks, it was all over. You lost 35%. Imagine your account, which was doing really well because you were cruising, like you were super happy here. You're like, woo, we're killing it. And then all of a sudden, boom, 2 weeks later, different ballgame. 2 weeks later, you're scared, fear kicks in, reality kicks in, you got to take action. Now, most people probably didn't sell out last year, and good, because after that, it rallied. But this is a trap. I call this the bull trap. Because the market's going up, and it doesn't make any bloody sense. How many of you think that what's happening in the stock market, and have any of you looked at what's going on in the stock market? It's kind of like this. Does that make any sense? Are jobs really that good right now? Are people really making that much money? Because statistically and mathematically, they're not. But they're just better than last year. So the earnings reports and everything are coming out. Those jobless claim reports aren't good. Folks, we got to wake up and we got to really look at what's really going on there. Because if this is the bull trap, when does this bull market, this bubble, if you will, when does it end? When does it end? Well, I don't have the answer. Warren Buffett doesn't have the answer. Bill Gates and Ray Dalio don't have the answer. You cannot time the market, but what you can do is prepare. If there's a storm coming, we live in Buffalo, New York here. We get a lot of storms, big ones, 6 feet of snow. Can you guys all imagine 6 feet of snow in a matter of like 2 days? Yeah, it happens here. Okay. But what do we do before the storm? Goes on the news. There's a big, winter storm front coming in. It's going to be a blizzard. Do we freak out? A little bit. Some people do, but the smart ones, that have been through it time and time again, what do? They prepare. Stock up on water, load up on food. They make sure that they've got supplies. They hunker down. They get ready for the storm. They're ready. Storm comes and the storm goes. Some of those people that are ready for the storm capitalize on it. They get their plow trucks all ready and they go out and they plow people out. They got snowmobiles. They go out and shovel people out. They help people solve problems. And they make a lot of money doing that. So right now, what should you be doing? If we're somewhere near the top, I don't know if we're at the top. It could still go up another 10%. Heck, it could go up another 20%. We don't know. But is it safe to say that we're close to the top of the market? Steven, are we at the top of the mountain right now?
I think we're getting there.
I think we're getting there. We might even be there. And if you were at the top of Mount Everest, if you made that long, hard climb that a lot of people die on to get to the top of the Mount Everest, wouldn't you stop, look around and say, wow, this is beautiful. I don't want to go down right now. Wouldn't you just take it all in? Well, right now, the market, where it's at, you're at the top of Mount Everest. You really are. So what should you be doing? Well, each of you are different. So I can't give you any direct advice. But one thing that I would say is to listen to what Warren Buffett says. 3 rules. Buy low. How many of you have been buying when the market was low? How many of you bought last February, March, April, May, June, July, August? Market was low. Okay, so good, you bought low. How many of you sell high? This is the problem and the one that I find the most amount of people don't do. And there's various reasons. A lot of people will not sell high because they're like, well, I have too much in tax gains. My stocks are highly appreciated. My mutual funds are highly appreciated. If I sell now, I got to pay taxes. Okay, great. I got a solution for all the people that don't want to pay taxes. Here's all you got to do. Just wait. Wait for the market to go down. All you need to do, if you don't want to pay taxes, just wait for this to go down. If you bought here, when the stock market goes down, and I don't know, whatever stock you have, when it gets down to here, which is lower than where you were when you bought it, sell it. Sell it right there. And now what you've got is a problem solved. You no longer have to pay taxes. You got yourself a tax write-off. Great strategy, right? Think about that. That's what people think. They don't sell high because they're worried about taxes. Or if they're not worried about taxes, they're worried about FOMO. Oh my God, I'm going to miss out. If I sell now and it keeps going up, I'm going to miss out. How many of you sold crypto when it was, or Bitcoin or any of those when it was at 60? I don't know. Ask yourself, did you? Or did you buy when it got down to 30 a week ago? Are you buying low and selling high? Because if you do this, then the last rule is don't lose money. How many of you know how to not lose money ever in the stock market? Some of you do, some of you don't. And all you need to do is just follow these. But this isn't what people do. People do this. Number one, they buy high. Why? Why would you buy high? Well, I don't know. Why are you buying right now?
Exciting. Everybody else is doing it. My neighbor's buying. Everyone else. Hey, let's get it.
Yeah, my broke-ass brother-in-law just bought this thing. My broke-ass sister-in-law is buying real estate. So I'm missing out. FOMO, right? FOMO. That's why. Euphoria. It's like freaking. It's awful. So number two, what do? They sell low when it all crashes, and people's sentiment changes so freaking fast. 1 week, everybody's like talking about Bitcoin. Oh my God, Bitcoin's amazing. It's going to be 150,000. It goes down to 30 and they're like, well, guess we got that wrong. And they sell out.
And then it goes right back up. They sell it the opposite ways. Yep.
And after they sell low, they lose money. Folks, you can't do this. I'm not trying to make this all about the stock market, but here's what I'm trying to explain.
Well, it's in real estate too. I mean, when did you have a pretty good or had a pretty good sized rental portfolio? I mean, when did you buy all your houses?
Yeah, I had 91 units a little over a year ago.
When did you buy them all?
2014, 15, 16, 17, 18, 19.
When there's still deals there and now the market's going crazy. And what are you doing now?
Selling them all.
Selling them all.
Selling them all. And you know what? I got a huge tax bill, a huge one. Do I like it? Absolutely not. Do I know how to fix it? Yeah, a little bit. I got lots of write-offs, and I know how to do things like private foundations and complex, trust and all sorts of stuff, but that's neither here nor there. We'll teach you that in a different training. But you know what? I don't mind paying taxes today because this is the lowest taxes they're probably going to be for a very long period of time. I'll pay the taxes today because you know what I did? I sold here. And in my eyes, I don't know if that price is ever going to go higher. I feel really good about my decision. And then I know how to move money, and I know the things that we're going to teach you. I'm going to use that money and move it. And I'm going to wait for the market to go back down. And when the market does do this, I don't know, is it 2021? Is it 2022? Is it 2023? When it goes down, I'm going to buy back in. But you know what? Here's the thing. Let me ask you all, how many of you are super excited about treasury bonds? Anyone know what treasury bonds are? U.S. treasury bonds, 20 or 30-year U.S. treasury bonds. Anyone know what they are? We'll just call them treasury bonds. Okay, they're boring as hell. They're backed by the full faith and credit of the U.S. government. Some would say they're guaranteed. They are. Okay, you buy a treasury bond. Here's how they work. Very simply, I'm going to draw a little cross here. Okay, it's going to pay you an interest rate. Let's call it 2.2%. It fluctuates every day, but let's just say this is your interest rate, your coupon. Coupon is interest rate. I don't want to get too complex. Just when you buy a bond, you're lending money. The borrower, okay, the debtor is the person you're buying the bond from. Who is it? The U.S. government. And what are they doing? They're going to promise through a contract, through the bond, to pay you an interest rate. How many of you get excited about 2.2%? Please don't answer that if you're going to say yes. Please don't answer that, because if you get excited about 2.2, this is not the right training for you. But here's the thing. Here's how they work. When interest rates go up, pay attention, folks. I want you to really pay attention. This is the stuff that we're teaching, okay? This is the stuff that you need to understand. Because if you sell out of the market, well, then what? Well, Chris, what am I going to do if I sell all my stocks and my real estate? What am I going to do with all this money? I'm telling you, treasury bonds, I don't sell them. I can't make money on them. So just know that I'm not pitching treasury bonds for any self-interest, like buying from the U.S. government. But if you buy treasury bonds right now, where are they in price? Low. Why are they low? Because who would want to make 2.2% on their investments when they can put their money in risky assets like stocks and crypto and make way more? Not a lot of people, except for the people in the know. So if interest rates go up, which they are, anyone look at interest rates recently? They're going up. Yellen just said that they're probably going to continue to have to keep raising them to kind of curb with this crazy inflation. So interest rates are going up. And you know what happens when interest rates go up with bonds? The price goes down. So if you're an opportunity seeker, when do you want to buy? Do you want to buy when the price is high or when it's low? When it's low, right, Stephen? Yep. So right now, if interest rates keep going up, the price of bonds keeps going down, you can buy these things at a bargain. But why would you do that? Well, let's just say that, just like I mentioned, let's just say that the stock market's going to go down in 2 years or a year. It's going to crash. It's going to be 1929 all over again. Just play the game with me, okay? If that happened, just like last year, what was the first thing the U.S. government did in reaction to COVID, in reaction to the markets falling uncontrollably? What was the very first lever the U.S. government pulled? Any one of you, what was it? Anyone think interest rates? Do you remember how fast the Fed dropped interest rates and they kept dropping them to almost zero? Do you guys remember that? There was even discussions of dropping it below zero. That's right, a negative interest rate. There was talks of that, but they didn't do that. But they got to almost zero. When interest rates went to almost zero, do you know what happened to U.S. Treasury bonds? Look it up. Google it. Google U.S. Treasury bonds. They skyrocketed. And the same exact thing will happen when the market falls again. When the market falls, the Fed will very quickly drop interest rates. So now interest rates will fall because that's what the government does. They pull that lever first. Interest rates fall, and what will happen to the price? The opposite. It will go up. Well, if you look at economists and if you read or study this as much as I do, if interest rates go from where they're at right now, about let's call it 2.3%. If they go to let's just say 0% for all intents and purposes. I'm not going to be exact here, so don't hold me to these exact numbers. Do you know how much money you'd make on these guaranteed, boring 2.2% U.S. Treasuries? 30 to 40%. That's right. The price of your U.S. Treasury bonds would go up 30 to 40%. But I bet you didn't know that. That's a risk-free return. because you took no risk. These are guaranteed. That coupon is guaranteed by the US government. So I'm going too long into this, folks. But again, this is just the things that you're not taught. Why? Who's going to make money on you buying US treasuries? Who? Anyone? Is your advisor going to make money? Is your bank going to make money? Let me go one more round. This is so important. I'm going way too long on this. Why is it that the banks, the traditional banks of the world, the Wells Fargos, the Bank of Americas, all of them, why is it that they put their money in the exact opposite place they tell you to put your money? I want you to think about that. I got a video on YouTube and we're going to teach more about that. But why is it that banks put their money in the exact opposite place that you put your money? Why is that? Why is it that banks tell you put money in mutual funds and CDs and bank accounts when they do the exact opposite? They put their money in the exact place that everybody tells you not to put your money. You ever think that maybe they know something you don't know? Or is it just that they can't make money by telling you the truth? The truth hurts, folks. And that's what we're here to tell you. So Stephen, I went way too long. Let's keep rolling this, because like they don't want to just hear about stocks here today.
Yeah, no, it's so important. And there's so many other aspects too. You know, we'll get into with real estate as well. But I mean, you could sell the things that are, looking at portfolios and evaluating, get rid of some of them and move on. And we can get into it. But I want to pull this slide back up now that
didn't like this part at all. Criticizing the stock market by criticizing behaviors. That applies to people who trade and try to time the market. I'm not suggesting you time the market. Nobody can time the market. I'm suggesting that you simply assess, can you accept the risks of a market falling? And if you can't, make changes and understand how to position money after that. And then, so I don't know what this is all about, but what I just said is exactly what the wealthy are doing with money. And then we talk about IBC. IBC is where you put your money and then IBC is a process of moving money. Privatized banking, those specially designed and engineered whole life policies, we put money there because we're going to make more than we can in traditional places like savings accounts. We take that money out, and yes, can we deploy it into the stock market when it goes down? Sure, I bought last year when the market dipped, and I used money from my privatized banking policies. So something is not clicking there, David, and I'm not critiquing you, but I also want to make sure that you get something out of this and that you understand what we're talking about. And equities average rate of return. Can I just hit that one? Very important. Average rate of return. Okay. So if you gave me $100 and I made you 100% return. Okay. If I made you 100% return, you got $200. Okay. Next year, I lose you just 50%. So you went up to 200. This year, I lose 50%. You're down to 100. The next year, I make you 100%. So now you're back to 200. Okay, so I made you 100%. You're back to $200. You're feeling good. And then the next year I lose 50. I'm doing this backwards because I'm just doing it quick, but I lose you 50%. You're at 100 now. So this one should have been 100, but 100 to 200 to, whatever it is, but 100% minus 50, 100% minus 50. How much did you actually make if you only have $100 left at the end of it? You made nothing. And you lost the time value of money, the ability to earn interest on it. So how much of a return is the average return? The average return you made as per the prospectus or all those mutual funds, 25%. Did you make 25% or did you make nothing here? You made nothing, but you averaged 25%. I've been down this road too many times. I just have. And it's all goes into what you've been taught and what most people have been taught, not all of it, but what most people have been taught is a lie. And that's all we're trying to talk about.
Yeah. And I mean, even annualized rate of return, what you're saying, over time, but what happens if you're at the point in retirement where you're coming up to retirement next year and all of a sudden this fall, the stock market crashes and what you thought you had in your 401k that you've been saving for your entire life now falls in half? You don't have the time for it to come back up over the next 10 years. You don't have time for things to correct themselves. You need that money right now. So especially those that are, younger, obviously we're going to teach you ways to self-direct and use retirement accounts and use this with IBC and have it all come together. But, if you're especially if you're younger, that's great. Compounding interest when you're younger is a beautiful thing. But what do you do if you're older and you're approaching retirement age or you're in retirement age and this stuff starts to happen? I mean, financial advisors are going to teach you about annuities and all these high cost, high fee vehicles that have downside protection, but they're there's so many better ways out there. And that's what Money School is all about. And that's what we're going to get into, because when I'm going to share my screen again here, because I want to get into exactly what we're doing right now. And what Money School is no matter what your path is. Chris, can you see this?
I got it. Yep.
Is this the right one?
Go. Perfect.
So no matter what your path is and where you are right now, again, everybody's different, but this slide right here is what we call a financial GPS. And you've probably heard that before, but just like if you hop in your car and you want to drive to Disney World, you could probably, if you live in South Florida, just driving north, you'd figure out your way. If you're over on the other side of the country, just start driving east and eventually you'll run into something and make your way there. It might take you forever, but you could probably eventually figure it out. Or you could input it into a GPS where it tells you step by step exactly the fastest, most effective, and most efficient way to get to where you want to go in the quickest amount of time possible. So if you do that with driving and you do that with other stuff, and you're like, why don't you do that with your money? Okay. And why give that control away to people like financial advisors and banks and agents that, I mean, who cares about your money more than you do? Nobody. Nobody cares about you, your situation, your family, or your money more than you do. So why do you give away control of it? Take control of it, create a plan, a financial GPS that's going to take you from step A to step B in the most efficient and effective way possible. And that's what we're going to teach you how to do. And so the way that we do this is create this financial GPS is first we educate you, and then we provide you the opportunities and the action so you can start implementing exactly what we teach you step by step. And we've been doing this now for years and it works beautifully. So what we have, the way that we teach this is through what's called a 3-day intensive money training. Okay. And I just wanted to bring this up real fast before we keep rolling here with the rest of the training, because I think this is important for you guys to have the dates and understand what's going on. So these preview events that we're doing right now, these and the next 3 leading up to this weekend, June 4th, 5th, and 6th. Let me put the dates up there. So June the 4th, the 5th, and 6th, Chris and I are doing 4 preview events leading up to this weekend. All 4 of these preview events are different. So we want you to be on every single one of these free preview events that lead up to this 3-day training as well. However, we know that a lot of you on here right now are action takers. We know that you understand that there's a need for what we teach and that you want to do something better with your situation and prepare for what's happening in the markets and prepare for what's happening in the country and the world coming up in the next year to couple of years, right? So those of you that know that you're ready, we want you to have the opportunity here tonight to go ahead and enroll for the 3-day and save your seat. Okay. So go ahead and get in, lock yourself in. We're going to give you all kinds of bonuses. And we'll talk about that. You're going to get all that ahead of time. So we're going to give you all that right away. So those of you that want to enroll, we'll give you the link in a minute to be able to do that, to lock in your seat for the 3 days. But we still want you to come back and join us for the next 3 preview events, because we are going to talk during these 4 free preview events about different strategies and different techniques that we don't have time to teach during the 3-day training. Okay. Chris, anything you want to add on that?
No, it's an amazing 3 days. It's a lot of some of the biggest experts in different fields, from crypto all the way, we had Spencer talking about cryptocurrency. So if you really want a holistic view of crypto, its origins to where it's at and how you can do it. I mean, these are all the things that we cover. It's insane. I mean, if you're a real estate investor, there's a ton on that, but more just specifics, not about how to buy or the traditional stuff, money related stuff, how to find money for your real estate deals, how to leverage money, how to use the banks in ways that nobody's ever probably shown you banks can be used. And things are changing so rapidly right now. That's an important topic. And then we're going to talk about privatized banking for sure. That's something we always talk about. It's the foundation. It's the same place that the Rockefellers, the Rothschilds, the Walt Disneys, the Ray Krocs, the Joe Bidens, the McCains, all of them park their capital first. It's where the money should start. And then from there, we can reposition it. But there's so much self-directed IRAs. We all know what IRAs are, individual retirement accounts, traditionals, Roths, simples, there's all sorts of them. But did you know that you can actually be in control of how to direct that money through a self-directed options? Not for everybody, but it's certainly a nice thing to learn about, because there's only about 4% of the IRAs out there that are self-directed. Can you guess who those 4% are? I wish it was 5, because then it would really fit into what we talk about, the 5 and the 95. But there's just so much that we cover in 3 days. We have an hour and a half today, and then we've got 3 other trainings. We're going to hit a lot of it. but we're trying to get the stuff we're getting out for free now so that we can really dive into the things that will really be the nuts and the bolts of how this works, the application. And it's not just us talking, it's, you know, all of the speakers that are going to be there, anything from asset protection to trusts, all that stuff is covered. And I'm not doing it any justice because it's just too much. There's so much we pack into 3 days, and it's an incredible 3 days to say the least.
Yeah, absolutely. And we can kind of show you some of the different experts and speakers that we have that are coming on to talk about specifics. But, you know, these 4 free trainings that we're doing are going to give you the kind of like the mindset and the strategies and open your mind to a new way. There's a really cool YouTube video that we usually play when we start talking about infinite banking and money multiplier called the backwards bicycle. Chris, we should play that maybe on one of the next previews that we do.
Play it next time for sure. We'll
yeah,
open
I mean,
with that.
the backwards bicycle, I just love it because it just, you know, we're all programmed to think one way and to look at money and investing and all this in one way. And it just doesn't work anymore. So what we do is through experience and through studying is we've put all of this together in a way that anybody can go out there and follow what we teach and put yourself in a much better financial position for you and your family moving forward. And we do give you a lot of information. That's why we do these preview events leading into it. That's why it's 3 full days. We say it's 10 a.m. to 3 p.m. Eastern time, all 3 days. We end up going much longer than that. I think I was still sitting here at like 4:30 or 5 o'clock last one that we did on Saturday. So we end up going long. We answer questions the entire time. Like it's very, very, very good. And then we do it even one better because we give so much information. We had people saying, man, I wish I could go back and like watch that section again, or, oh man, I had to miss this one area of it. So we actually record the entire thing now. We record it and we give you the recordings right afterwards with timestamps. So you see exactly what section that you want to see. You can go right to it on the video and you can watch it over and over again into the future. And I can't tell you how many students have told us that they absolutely love that we do that for them because they're able to go back later and catch back up, or they weren't able to go to one of the days because of work or something. So they're able to catch up on that night. So we do give you the recordings for that. So it's just a beautiful thing there.
Yeah. So to sum up, like what you learned at the 3 days, you know, number one, if you're in real estate, we're going to teach you a lot about money, and money is needed in real estate. So we're going to cover that. If you're not about real estate, we're going to teach you also about things like the stock market, where there's several sections in the 3 day that talks about the stock market. Not what I just did. What I just did is just very high level, but we're going to get down in the weeds and we're going to talk about hedging. We're going to talk about your stock portfolio that you have that you don't want to get rid of, but you want to hedge against downside risk. Teach you how you can do that through options and derivatives and different strategies that way without taking a ton of time. Like as soon as you say that, people's eyes roll back and like, I'm not smart enough for that. I don't know. But if you just took some time and you learned 1 or 2 strategies on how to hedge against downside risk, then you definitely would protect yourself. And hedging is exactly what Warren Buffett does a lot. And you hear him talk about all the time. He talks about puts. He talks about how he uses hedging. You know, he keeps his big stock portfolios, but when the market goes, he's got these hedges, these leveraged bets that basically make him money when the market's going down, so he doesn't have to let his portfolio go. How about income? I know a lot of people should really focus on income with their markets. Well, he'll teach you, you know, and it's not me, it's Sodi, he's a professional trader. That's what he did. He did it in Wall Street. And then he came over and joined us. And he's going to talk to you about covered calls and how you can make income off of your portfolio while it sits there. Why not have stock, but then also make an income off of that? Very low risk and a very simple strategy. You're going to learn all those things. And then we're going to talk about how to protect your assets. I always like to say that, but how to do that with entities. We're going to talk about tax strategies. Not me. We have a CPA that comes on and talks all about tax strategies. If that's a hot button right now, then, you know, because we're just going through this and taxes are going up, we're going to cover that. So there's just so much that's covered in those days. We're going to talk to you about notes, how you can make money in notes, which is not buying real estate. It's just making money on the notes and trading the notes. The money multiplier method, you got the entities and asset protection. You've got the software and real estate, the 10/10 trading. We've also got some bonus sessions, which we're going to get in there for you. I mean, you can see mobile home park investing. Now, how many of you actually want to buy mobile home parks? I bet you a very small percentage, but how many of you want the returns from mobile home parks? You can have that without ever having to step foot in the mobile home park, deal with the risk, deal with any of the people that are renting from you. That's passive. You can learn how to do that. And Chris Rude's going to talk about that. And there's a bunch more stuff, but just trying to lay it out, just teach you what you're going to learn in these 3 days. It's deeper and it's more tactical than what we can do in these free trainings. So that's a great explanation right there, Stephen.
Yeah, absolutely. So, all right. So we got about 15 minutes left, Chris, and I want to keep rolling.
Let's ask the audience. We've got a bunch of people on here. So what would everybody really like to learn about? Like, if we got 15 minutes left with you now, what is the number one thing? First person to tell me what you want to talk about, money related. Let's get into it. And if not, we'll just pick a topic, because I love talking about money and how it works, because that's just what I like to do. So does anyone have anything particular they want to learn about? Sometimes we just talk, Stephen, and I think we never really ask, like, what does everybody need and want?
All right, while they're doing that.
Awkward silence. Nobody's commenting.
While they're doing
Options,
that.
Okay. That's all right. How to generate profits with minor investments immediately. How to generate profits with minor investments immediately. Well, if we know the market, and we know that I'm going to hit both those options. Okay. If we know the markets are going to be volatile, which they certainly are. Anyone not think the markets are volatile right now? They're up, they're down, they're sideways. So what if you knew how to make money in every market condition, from markets going up, which they have been, okay, to markets going down, which they did, to markets going sideways? Well, you can use options and option strategies, which are nothing more than contracts that basically give you the ability or the right to buy or sell a particular stock at a given price during a given time. And that's really all options are. It sounds complicated, but if you really look at how you can use them. Now, a lot of people teach options as a way to get like a get rich quick thing. You buy a call on a stock that's going to appreciate. You watch the news, and then that stock looks like it's going to skyrocket. You buy a call and the market goes up, and you're leveraged. Every one option controls 100 shares of stock. So if you buy an option, let's just say it cost you, I don't know, let's call it one option cost you $200. You now control 200 shares of whatever stock that option is. So that means if that stock does go the direction you want, you're leveraged 100 times, because you own 100 shares of stock for one contract. Same thing. Let's say the market's going to go down. Let's say you got something, Elon Musk goes on the night before and says, Tesla's way overpriced. Oh, sounds familiar, because he's done this before. What happens the next day? The stock tanks. Well, if you had gotten in at the end of the market when he did that tweet, and you bought a put, and that next day the market did actually indeed go down, which every time Elon Musk tweets something, it seems like the market follows his tweet. It's crazy, but or Reddit or one of these other things. What if you thought the direction was going to go and you got it right? 100 times leverage. You're buying one option, hoping the market goes down. It's called a put. Okay. So how I always describe it is, when the phone rings, you pick up the call. That's when it's going up. Okay. The calls are when the market goes up. When you're done with the call and you want to put the call down, or put the phone down, you put it down. So that's when the market's going down. That's how I always remembered it. Maybe that's helpful. Maybe it's not, but that's a very important thing to learn. Now, maybe you're not going to be an options trader. And I understand it's complicated if you really dive into it, but what if you just wanted to learn one particular thing? How to earn income off of stock that you already own. That's called covered calls. We can teach that very easily, and we do. So, how do you gauge, somebody asked here, how do you gauge the peaks in any markets? Well, I guess I don't want to get too in, because you can't time the markets. So can you get it right every time? No, but here's what you can get right. The market works in extremely rhythmic and predictable patterns, support and resistance lines, or what we do is we're a level above that, because we do a lot of futures trading here. Price movement. Price movement is something that is very easy to see how it works, but I'm not going to go there. But if you can understand that most stocks will trade within a range, let's say $100 to $120, that's the range. You can trade that up, down, up, down, up, down within that range. So how do you gauge it? You learn how to read the chart. You learn how to understand the patterns. You learn how to, first and foremost, understand price action and price movement. That is how you do that, Aaron. You just, and also on the larger scale, the macro scale, you understand the market cycles, which is what I've been talking about when I was drawing. The market cycles are, when does the market actually go up, and at what point does it actually go down for a big one? We're approaching a 90-year cycle. And everything you've been seeing really since 2008 straight through to now is all part of this bigger cycle. Now, Ray Dalio will tell you best. Ray Dalio, the founder of Bridgewater Capital, the largest hedge fund, he almost lost his entire career by trying to time the market. He thought he was so dead on right. And then you know what happened? The government stepped in, did some stimulus and some other things like they always do, and it passed. And he was wrong. He wasn't wrong in the macro level. It certainly did go down, but his timing was wrong. Again, you cannot time the market. The best in the world can, so don't try to do that. When I sell at the top, I'm not saying time the market. I'm simply saying if you can't accept the risk, if you can't accept what potentially could be coming, the storm, then what other option do you have? If you can't accept the risk, if you don't have the time horizon to ride it out, then why would you? Or if you just logically, I mean, this is my logic, why would you ride it out? Why would you ride something out when there's other places to make money? I showed you treasuries. That's just one. There's lots of other options that you could do. How do you get started in real estate with little money? Leroy, that's a great question. And it's very easy. Remember earlier, Stephen said, it's not about your actual resources. It's about how resourceful you can be. Here's the golden answer to that. Okay. I wrote about this in my book, The Private Money Guide. How do you get started in real estate with little money? You change your focus. First and foremost, you got to have the deal. You got to be able to buy the deal at the right price. But once you've got the deal, how do you buy it if you have like no money? Let's say you got $5,000 in your bank account and you're buying a $100,000 property. The math just doesn't make sense. Oh, I can't qualify through the bank, or they only want a cash deal because every deal's going crazy. Here's what you do. You focus on solving someone else's problem. So how do you do that? Very quickly. Let's just say you got a neighbor. How many people do you think, how many of your neighbors out there, all of you, how many of your neighbors have how many of their houses have gone up in value, have appreciated values of their house, or have equity in their house? The answer is every one of them. The real estate market has been skyrocketing. Pricing, depending on where you're at in the country, some places have appreciated 20% in 1 year since COVID. So if that's the kind of appreciation, that means that these people, your neighbors, probably have a bunch of equity in their house and they're super excited about it. You have that conversation with them. Oh my God, I got so much equity in my house. This is great. Is that equity changing their life? No. So why don't we then have a discussion with them and start talking about your equity in your house? Always start with your situation. Because what happens when you talk about your money? What happens when you talk about your equity? Isn't the person you're talking to thinking about their equity in their money? Always. So if you're talking about the equity in your house, but then you say, well, you know what? I'm going to leverage my equity. I'm going to put those lazy dollars that are sitting on my couch, eating my potato chips, drinking my soda. I'm going to put that money to work. Well, that sounds awesome. How do I do that? Great. Here's how I did it. I got a home equity line of credit, or I went to this 3-day event and I learned about home equity agreements where I can get the equity out of my house without any debt, without any monthly payments. Yes, that does exist. And you'll learn about that in the 3-day from Matthew. And I took that equity and I put it into this real estate deal, this cash producing rental deal, or this flip, whatever real estate you're doing. And I made a bunch of money. And you can do the same thing. Matter of fact, I've got a great deal, Mr. Neighbor. Let's just pretend the neighbor's John. John, I got a great deal right now. Why don't you do the deal with me? Oh, I don't know anything about it. No, John, I'll do all the work. I know you're busy with your kids and work. I'll do all the work on the real estate deal, just like I've done before. And all we'll do is we'll get into this deal. We'll partner in it. And you put up the money. Oh, John says, I don't have money. No, John, you do have money. We just talked about the equity in your house. The money's right there, lazy on your couch. John, go get a home equity line of credit. Call this Quantum RE company and talk about getting a home equity agreement. Well, they'll give you the equity, and then we'll use that equity that's sitting lazy in your rafters doing nothing, and we'll have that equity pay your car payment every month. John, you want me to pay your car payment every month? I'll do it, and we can do it by applying that money. So Leroy, what I'm talking about is you want to raise money and you don't have a lot of money to get into real estate, learn how to solve somebody else's problem. And everybody's got a problem, because I don't know many people that like making their car payments, their college tuition payments, or all those other payments, pay them for them by leveraging the equity sitting in their house, the equity sitting maybe in their 401k, have them take a loan from their 401k. All these things are different things we're going to teach in the 3-day, but I'm hitting it hard. How do you buy treasury bonds? That's easy one. Go online.
Even on top of that, Chris, real fast before you get into treasury bonds, just so everybody knows, the next preview that we do, we're going to talk about hidden equity, and we're going to teach you exactly how to go out there and talk to your friends and neighbors and teach them this stuff and solve their money problem. So if you're starting with nothing, how to go help them, and then it'll be an advantage to both of you, how to take back control, how to use old 401ks and transfer that into these self-directed accounts. And if you don't have one, I guarantee you one of your neighbors, one of your friends, somebody that you know does, that you can go show them how to do that. And then we're going to teach you how to create a constant and predictable income following these strategies for the rest of your life. How do you like the sound of that? Consistent, predictable income for the rest of your life. So that's going to be on the next preview event that we do. And then on the third one, we're going to get deep into infinite banking concepts. So this is where we say, change one thing and you can pay your debt off a lot quicker. Change one thing and you can compound your money that much faster and build your wealth that much faster. So we're going to teach you the money multiplier, infinite banking concept on our third preview. And then the fourth one that we do before the 3-day training even gets here, we're going to go through all the tools that you're going to receive included with your tuition for the 3-day training, what we call the file vault. And we're going to teach you about that. And we're going to show you actual case studies using the file vault, how you can start evaluating deals and putting these deals together and how to go out there and make this stuff happen. So that's all before we even get to the 3-day training. And I do want to show a little bit more about that. If you want to hit the treasuries, and I'll pull this up, Chris.
Yeah, very simply. So Ramiro, I believe, is who asked that question. To buy U.S. treasuries, you can just go online and Google, how do I buy, U.S. treasuries? It'll take you to a government website where you can buy the treasuries, but make it easier on yourself. If you've got a brokerage account, a Robinhood, a Charles Schwab, a TD Ameritrade, just go on there and just Google, you can Google this. I'll give you the one that I'm buying. This is not a recommendation, not a suggestion. I'm not making any stock tips or recommendations here, but this is what I'm buying. It's called TLT. Okay, it's an ETF, an exchange traded fund that is 20 plus year US treasuries. Super easy way to get exposure. And it's a great way to do it because it's liquid. If you need to sell it, you just click the sell button. US treasuries are the most liquid investment, maybe in the world. They truly are, because even though the US dollar, some of you think the government's trying to destroy, which they probably are, but they're trying to create inflation is what they're trying to do, because they don't want to pay all this debt back at today's values. They want to pay it back at weaker dollar values. So they create inflation. And in doing that, by creating this inflation, what they're actually doing is helping you be able to take advantage of opportunities in treasuries. And treasuries, everybody wants them. The US dollar is still the nicest house in a really shitty neighborhood. Excuse my language, but it is. The US dollar is still the best currency that there is out of all of them. Maybe not in the future, but today it is. So that's a great way to do it. Let's see. And then what was the other? So, some of the other things, Stephen, you were talking about is like the tools. Here's the tools. This is a perfect loan proposal. This is what we're going to teach you. This is how you prepare a deal and how you get funded for your deal. Okay. There's all sorts of things that we give you. The max offer formula. It's right there. I've just got like a thing.
We're going to go through these on the next training. I'll pull it up though.
Right. Sorry, I'm getting ahead of myself, man. I get excited.
We have, so if you look at the screen, we have the cash flow deal inspector. You get the max offer form, the closing cost estimator, property spec sheet. I mean, we have experienced real estate investors that come to us and they're like, where did you create these templates? And this is all stuff that Chris has created through flipping 260 houses and put together. And we give you this included with the 3-day. And even if you're not an active real estate investor, maybe you're looking at passive investing, you need to understand how to read this stuff. So we're going to teach you all that. And what I wanted to do is show you what you're getting for the 3-day so that I can guide you over how to get enrolled for those of you that are ready. And then we'll have to meet you on the next preview to keep going with this. But Chris, I'm going to pull this up real fast. Okay, so this is the 3-day intensive, 3 full days with Chris, America's #1 money mentor, teaching the secrets of money and powerful techniques and strategies. It is a hands-on training, as I mentioned before. We do spend time answering questions. Our whole team is on there helping and responding. We talk with you before and after the training. We do one-on-one coaching sessions to help you create your financial GPS. So that's all included with this. And you also get a comprehensive and updated strategies for what's happening right now in 2021, because let's face it, what's happening right now is a lot different than happened in 2019, 2015, and what's going to be happening in 2022. So you need to learn what's happening right now. This class is $1,997 when we teach it live in person. Because we've now moved to a virtual format, you guys get to take advantage of that since we don't have all the cost of travel and everything. So here's what we're doing. We're still giving you everything the same. So June the 4th, the 5th, and 6th, it's actually 3 p.m. or later. So all 3 days, we give you the recordings for those as well. So you get all that. You get access to the master class, which is a 4-week online training series that previously we were selling individually for $997. You get the Money School file vault that I just spoke about. That we've sold in the past for $597 by itself. The comprehensive wealth builder kit, you also get access to all of those on-demand training videos for $997. And then you get a personal self-directed IRA retirement resource kit. So we'll talk more about this on the next preview when we get into self-directed IRAs, but this is an $1,100, almost $1,100 value between the education and between the account that we actually give you through a relationship that we have through a self-directed custodian. So that's everything that you get included with the 3-day training. And actually one thing that's not on here is you also get a 30-day trial to MSTV, which is something we started last year, Money School TV, which is just, I mean, the value for that you get out of this 3-day training, the price alone is worth what you get in MSTV alone. Put it that way. Would you say that, Chris?
I would 100% agree. MSTV is phenomenal, and it's only getting better every week.
It really is unbelievable what's in there. All the trainings on entrepreneurship and mindset and real estate. And I mean, that video that Chris Rude did about wholesaling, somebody was asking about getting started in real estate with no money. Wholesaling is the best way to do that. The training in MSTV that you get access to included with this, just watch that and that'll set you leaps and bounds beyond other wholesalers right off the start. All right, so the total value. So what we're doing is we're doing this for you guys here today for $297. You get all of that, including the recordings and everything, to join us for those 3 days. So we'll put the link up over on the chat box. It's moneyschooltraining.com/registration. And you can go on there and get yourself set up. You'll get an email welcoming you. You'll get set up in our Teachable platform, which is where all the recordings will be, which is where the masterclass, MSTV, the file vault, everything will be inside of our education platform that's ran through a program called Teachable.
Yeah. So, there you go. I mean, it's a ton of value, and we've been doing this, and we have so many testimonials that just prove to the success of what this 3-day does. But again, some of you are probably ready to take action and get this for $297 today. And that's great. Some of you are like, well, I just got around the campfire. Like, let me see some more, which is why we have the next training Thursday. Same great place, same great time. This is the link you use. And then if you're ready, then great. But we're going to go 3 more times after this. And at the end of that, if you don't see value in this 3-day training, well, then maybe we can't help you. Maybe it's not something that we can actually help you in. But you know what? There's very few people we can't help, but we can't help everybody. We're looking to help the 5%ers, those that want to create their financial future. The people that want to conform and just follow what everybody else says, this probably isn't for you. So you got to draw that line in the sand, like I said earlier, and decide, what side are you on? Do you want to conform and bury your head, or do you want to rise up and be the light in the darkness when it comes and show others how to actually make it through the storm that's coming? And really, that's something that only you can decide. So I hope you enjoyed tonight's training, and we're got a lot more coming next week, or I'm sorry, Thursday, and then next week as well. So if you guys want to join us, make sure you're there, because we're not gonna stop this. This train is gonna go with you or without you. So I hope you'd get on the train and join us for Thursday's training, where we're really going to get into it. And Stephen, what are they going to get Thursday? What are we going to cover?
We're going to start getting into hidden equity. We're going to start getting into getting out there and taking advantage of some of these deals. We're going to get into taking back control through self-directed investing. And then we'll show some case studies on how to create consistent, predictable income for the rest of your life.
Absolutely.
So that'll be on Thursday's
next week,
show.
We'll definitely go into how to leverage that hidden equity sitting in your house or maybe your rental properties. We'll talk about how you can leverage your 401k and your employer-sponsored retirement plan, money that's sitting there, how you could use that. And then we're going to talk about a whole bunch of other things that are sitting. Sometimes building wealth isn't so much about all the things that you think: working harder, hustling more, working overtime, taking on risk, giving up control. A lot of times building wealth is just teaching you how to actually make the money you have, or not even money you have, money that you have access to by solving someone's problem and then making that work for you. And we're definitely going to cover that. And I want to leave you all on this one thought. The easiest way to build wealth. This is it. This is the easiest way. And this is something nobody really teaches. Maybe Dave Ramsey, but in a different kind of way. The best way to build wealth is not the traditional sources. The best way to build wealth is to take back the money you're giving away to everybody else. On the third training, we're going to really talk to you about how you can recycle and recapture all of the money that you're giving away to everybody else. So just think about this one thing. If you're paying a credit card, a Visa, an Amazon, an Amex, a Barclays, whatever credit card you have, Capital One, I want you to look at before the next training, I want you to look at how much interest you're paying to them every year. And I want you to think about every single time you make a monthly payment to them. Maybe it's a minimum payment. Maybe you're overachieving and you're making double or triple payments trying to pay them down. Every payment you make, you're giving your wealth away and you'll never get it back. At a tune of anywhere between, I don't know, credit cards can be 10, they can be 0 all the way to 30%, 29.99. If you're paying a credit card 20%, you want to make 20% on your money without any risk? Learn how to take back the money you're giving away to that credit card that you're paying 20%. We will show you exactly how to do that very easily. And then you can decide if your way of building wealth or that way of building wealth is more efficient. So with that being said, Stephen, what do we got to close out?
No, that's it. Let's get, I mean, if you're ready to get enrolled for the class, I saw a couple of people were doing that already. I was just looking at our little sheet there. We look forward to it. Please join us for the remaining previews though, even if you're enrolling right now. But get in there, get set up. That way you're locked in. You don't have to worry about later on. We'll get you all the bonuses right now so you can continue educating before the class. I'd love to talk with you if you have any questions. If you're not sure if this is right for you and you want to hear a little bit more, about your situation, I'm more than happy to hop on the phone with you for a few minutes. I'll put my email in here. So it's Snaggy, snaggy at chrisnaugle.com. Just email me. I mean, I'm happy to share my phone number too, but it's usually easiest because I'm on the phone a lot. Just to email me. We'll set up a quick time to hop on for 10, 15 minutes and chat about it. And then every single one of you that attends the 3-day, I will be speaking with you personally after the 3-day as well. So you can implement your financial GPS and we'll get you taking action on what you learned during the weekend. So I look forward to that. And I look forward to seeing you guys on the next preview on Thursday. And
to close this thing out, I'm going to play a video because you know what? This has been some serious stuff, some scary stuff. Maybe for some of you, you haven't seen, what might be coming the storm. So I'm going to close it out with something that's going to make you laugh. And I hope you guys enjoy this, but we will see you on the next training. But for now, let's get you all to laugh a little bit. If my computer works, which again, I'm having issues. There we go. Always computer issues. All right. Stephen, can you see my screen?
Yes.
There we go. All right. Get through this. There we go.
Good evening, folks. I'm Seymour Cash from MSTV Worldwide, and I'm joined here with my co-host,
Anastasia Beaverhausen.
And we have a breaking news story for you tonight. This story has me incredibly concerned. And there's an epidemic going on out there, folks, right now, and it's happening all around. And no one's even covering this. No one's paying attention to this epidemic. It's like hiding in the secret shadows. What's happening?
It's called Fat Wallet. The wallet gains weight uncontrollably until the seams literally rip. It's initially undetectable until the damage is already done, and then it's too late. The wallet must be replaced to hold all that cash.
That really is unbelievable. In fact, the scientists are telling us that there is a strong correlation between MSTV and the fat wallet. And we have a new report that shows that over 30% of our viewers are experiencing a 30% weight gain in their wallet, regardless of their spending habits. And I think this is going to lead to major health problems.
Reports are showing hip problems, back problems, just pants problems. Pants are ripping, holes just out of the butts of their pants. Just
son of a
This just in, Seymour Cash has checked himself into financial rehab. Thank you for tuning in to MSTV Worldwide.